Hello, everyone. Welcome to Trading Tech Talk. It is 6 p.m. Eastern, and I'm glad that so many of you have joined today to this Tech Talk. And today's topic will be how to trade breakouts using our amazing Volatility Crusher indicator. My name is Daniel. And before we get started, of course, as always, keep in mind that trading is risky and only trade what you can afford to lose if worst comes to worst. When it comes to backtest results and hypothetical performance, keep in mind that these are not necessarily indicative of future performance. All right, so now that we got this out of the way, let's see what we're going to cover today. So again, we're going to talk just a bit about us and what's new at Trading Indicators. And we're going to go through some questions that we've received throughout the week. And then we're going to go to the meat of today, which is breakout trading. And we're going to use our Volatility Crusher indicator for this. And as you will see, this is an indicator which you can really use also for intraday trading very nicely. I'm going to cover plenty of charts. I'm going to answer all your questions if that's possible. And then we're going to give you a quick outlook of what's next week. All right, so let's get started. My name is Daniel. I'm the guy on the left here. And I'm the technical strategist at tradingindicators.com. With me today, again, are Rainer, who will do the charting. We have Nicola, who will explain to you the ins and outs of Volatility Crusher and how to tune it to your chart. And of course, there's also Homa, who will be manning the chat today. And as always, if you have questions, don't be shy. Put them into the chat, into the Q&A box, and Homer will interrupt all of us if there's a relevant question. And at the end, of course, we are going to revisit all of your questions again. Okay, so a couple of things that popped up in the last week. We received quite a few emails and throughout the week, of course, and throughout the month. And one question that kept coming up over and over again, if you already own one of our indicators and you're wondering where can I find the latest version of this indicator? Well, it may not be as obvious, but actually with your purchase of any of our indicators, you will get an account with Gumroad. Gumroad is the system that we use to do the payment processing. And once you've done this, you should have an account with Gumroad. So maybe just go through your email and search for Gumroad. And in there, you can log in and find always the latest version of the product. So let me quickly show you how this looks like. So if you're in Gumroad, you should have a tag here called library. And in there, once you click on it, you will see all the products that you have bought from Trading Indicators. In my case, I do not have anything here because I didn't buy any of our products technically. We just developed them. But for you guys, you should have these products listed here. And you should always find the latest version of the indicator listed here. On top of this, whenever there's a new version available, I actually do send a little post in Gumroad, which you will receive as a notification that a new version is available. So please look out for Gumroad, spelled like this, Gumroad, in your email, where we'll post all our product updates. All right. So now that we have covered this, another question that comes up every once in a while, actually quite often, is, well, I have an idea for an indicator or strategy, but I don't know how to program, and this indicator is not available on our store. So what's the answer to this? Well, it's called custom programming. We actually can build your indicator or your strategy for you. And the process for this is actually quite simple, and I've typed it up here. Oh, on the next slide. So basically how typically it works out is that you will contact us, either send us an email. If you already have my email address, you can contact me directly. If not, simply use our contact form on our webpage, tradingindicators.com, and briefly describe what you have in mind. Once you've done this, I will get back to you, or somebody from our team will get back to you. And first of all, we're going to look at feasibility. So sometimes what you have in mind is just not possible, or sometimes it's not specific enough. Oftentimes I get requests, or can you build me a strategy which will make me, I don't know, $100,000 a month with minimal drawdown? So the answer to this always, no, I cannot. You have to tell me how the strategy should be working. This is the details I would need from you. If they are not in your initial request, I may ask you to provide me some additional details about the indicator or the strategy that you have in mind. And once this is all worked out, I will get back to you with a time and cost estimate. And once we've received the payment, the project will officially start and we'll deliver it based on the time estimate. And once the custom project has been delivered to you, you have the chance to, of course, review it, test it, make sure it's working as expected. You can request corrections if needed as well. So, of course, we guarantee always that the project will work 100% to your satisfaction. And just to give you a quick overview of what we've done in the past and what most of our custom projects are like, typically it's an indicator. So somebody has an indicator in mind. He will come to us and describe what this indicator should do, what the visuals should be, and we code it accordingly. Often also we get requests for fully automated strategies, often for MT4, MT5, because it's a platform that's really meant to trade automatically. But also for mod, if we have a Ninja Trader, we often get requests for automated strategies and EAs. And sometimes they're really out of the box solutions, maybe a custom Excel project or some other project that you may have in mind, which will support you in your trading. All right, so this is another question we got. So custom programming is available. It's a service that we offer to everyone. So simply contact us and we take it from there. All right, so now what's new at Trading Indicators? So what's happened in the last week? It's been a busy week for us, but most of the work was behind the scenes. So you might not be able to see any change. So we did rehost our tradingindicators.com website. It's now using Cloudflare, which is a service provider which will increase the loading speed of the site. And if you load it up, you can see it should be loading a bit faster. It also comes with enhanced security, making sure that all your data, all your payment processing is as secure as it can be. So this is done. And you may have noticed a brief downtime of our website in the beginning of the week. That was a result of this rehosting to Cloudflare. We have also finished a new version of a dashboard that we've been working on for multiple years. It's called the Market Rover, which is a dashboard that Serge Berger, he's a trading educator, he specializes on swing trading, is using. And we've just published this new version. And one of the features that we have added are multiple watch lists. So you can define your own watch list that you might be interested in, and you can easily pull it up on the dashboard. Other improvements are we now have user sessions and a bit of faster loading speed as well. Okay, so now that's out of the way, the housekeeping. Now let's talk about the main topic of today, which is how to trade breakouts. And in particular, how to trade breakouts with our Volatility Crusher indicator. So let's first of all cover what is a breakout. So typically, when somebody talks about a breakout, it is meant to be a strong directional move in the market, which typically breaks through some levels of support or resistance. So if it's a breakout to the upside, the move will typically go through a level of resistance, or if it's a break to the downside, it powers through a level of support. Breakouts can occur on all time frames. They're not limited to small time frames. They can occur on, of course, on daily and weekly time frames as well. And if you want to trade the breakout, and the approach is typically always the same, you will enter in the direction of the breakout, because your hope is that price will continue in the direction of that breakout, and you can take advantage of this. Because once resistance is broken, this level is out of the way, chances are that price will move in that direction for quite some time afterwards. Or once support to the downside is broken, the hope is that price will move to the downside direction for quite some time afterwards, and you can trade accordingly. So here we have an example of such a breakout move. Market here has been sideways for quite some time. You can clearly see levels of resistance to the upside or support to the downside. But once these levels were broken, or the resistance level was broken, a breakout occurred. You can see this big candle here. And then the hope is that price will continue in the direction of the breakout. And this is an example for an upside breakout, but we can also have breakdowns. Breakdowns are, the method is the same, but price will break out to the downside. Similar strategy here. We have our level of support. You can see a price tested this level multiple times in the past, but eventually we had a decisive move through support. And the hope again is that price will continue moving in that direction. All right. So now, based on the principle of a breakout or breakdown, we have developed an indicator which detects exactly those breakouts or breakdowns, and it's called Volatility Crusher. And what the indicator has been designed to do is to spot abnormally explosive moves of price with high volatility. And when these happens, we have found out through various hours of back testing and research, or actually days and weeks of back testing and researching, is that the chances that price will continue in that direction is quite high. So let me explain a little bit more how Volatility Crusher works. As you can see here, these are the visuals of Volatility Crusher on TradingView. And we have a daily chart here. Again, Volatility Crusher, and you can trade breakouts on any time frame. It can be the daily one as shown here, but oftentimes you want to use it on a lower time frame as well. As you can see here, Volatility Crusher, first of all, will draw these boxes on the chart. And basically, this is the period where the market was more or less sideways, but eventually it will break out of this box. And then when this happens, you hope that price will continue in that direction. So we can see here are multiple long breakouts. So here we had one, price moved up, here another one, price continued to move up, and so forth. And if this happens, you will just enter in the direction of the breakout. And this triangle will show you the direction of the breakout. But of course, this happens also, or this can also occur to the downside. We had such an example here. Price broke out through the downside. And again, there was a follow through. That price was continuing in the direction of that breakout. And unlike 1, 2, 3 strike or divergence cloud, which we have covered previously in our previous tech talks, once a breakout occurs, once you have this entry signal here, you actually know right away what your targets are. So let me just use this example here, folks. For example, so here we had breakout at this point. And you see these lines here, 1 and 2, these are your 2 profit targets. So you know right away at the moment of the breakout where these targets are. And on top of this, you also know where your stop loss is. This is this line here, which in fact is a trading stop. So you know right away when to get out, either if things do not work out, or if things work well, when to get out as well, and when to book partial profits. And of course, Volatility Crusher is equipped, just like Divergence Cloud and 1, 2, 3 Strike, with our proprietary statistics, which will show you how well the indicator has been working historically on the long side and the short side. Now, before we continue looking at charts, let me talk a little bit more about the philosophy and how the calculation of Volatility Crusher works.
Daniel, before you move on, we have a couple of people that are wondering about Surge's dashboard.
Oh, okay.
Is the best way to just guide them to Surge's site, or?
Yes, Homa, if you can perhaps enter the URL of the Steady Trader, that's his site.
Okay.
Then you can find out all about Serge Berger's dashboard, his services, and how you can contact him for more information.
And just as a note to our audience, we also do have a few other dashboards we offer. One is called Zillion, and that's getting to be quite popular. And we have our own internal one as well called the SP500 Crusher.
Yes, exactly. And rest assured, we're going to cover all these in future tech talks. Okay, but back now to the Volatility Crusher. So the way Volatility Crusher identifies a breakout is when price breaks out of a period of compression. And the period of compression in our mind is a period where volatility has been low, which then eventually stops being low and volatility spikes up. And if this is paired with a price move, a decisive price move, we have a breakout. And these two together happen to be very reliable indicators of a strong breakout where there is a follow through afterwards. Now, a bit more theory, and of course, we're going to look at slides in just a second, but I want to explain to you a bit more in detail how Volatility Crusher measures these breakouts. Let's start with the sub panel here. This is a complementary indicator which comes with Volatility Crusher. You do not need it for trading, but it's important to look at it if you want to understand how Volatility Crusher works. If you look at this little purple line, which sometimes has a different color, this is the current volatility. And current volatility, roughly, it's a bit more complicated, but roughly it's the average bar size, how big my bars are. The bigger the bars, the more volatile the market is. The smaller the bars, the less volatile the market is. So this is our volatility, the current volatility. And what we do then, and what Volatility Crusher does then, it actually averages out the current volatility, and which is this yellow line here. This is the average volatility. And based on this average volatility, Volatility Crusher then calculates a standard deviation based on this line, which is the upper line here. So we have a standard deviation to the upside, but also to the downside. And whenever now the current volatility breaks above the standard deviation up here, then we consider this breakout of volatility or the spike of volatility as abnormally high. And this is exactly what Volatility Crusher is looking for. As you can see here, we had this breakout here or the spike of volatility paired with a decisive move above the level of resistance here. And if this happens, a signal is issued and you would go long at this point. And this combination of a spike in volatility together with a decisive move in price tends to be quite reliable when it comes to detecting breakouts which have a follow-through. So yeah, we had the breakout here and we had our price breakout there. And these two together form the essence of the Volatility Crusher. Now, optionally, these two are important and they have to be there every single time. But optionally, and there's a feature in Volatility Crusher to enable or disable this, you also require relatively high volume at the same time. So not only does volatility need to spike up and price needs to move decisive in one direction, we also need the volume of that bar to be abnormally high. And this is an optional feature. And our research has shown that for some instruments, for example, for the futures market, if you add on the volume factor as well, you get even a higher chance that there will be a decisive follow-through after the breakout. And of course, just like with any of our indicators, Volatility Crusher can be tuned in with its parameter to any chart in any asset class and any time frame. And the beauty about Volatility Crusher, it also comes with these statistics. So you get instant feedback of how well a change in parameters has worked out or has not worked out. All right, so here's just another example of a series of long breakouts that were found by Volatility Crusher. In this case, it's Microsoft on the 1 minute chart. As mentioned before, I like to use Volatility Crusher primarily on the lower time frames because it's very selective. So you don't get these breakouts very often. Even on the low time frame, you may only have 2 or 3 per day, even with on a 1 minute chart. And for me, this is just the right pace. I like a bit of trades throughout the day. So I don't want to wait for weeks typically for a trade. I'm more like a day trader by heart. But I don't want to overtrade either. And the volatility, because you get, at least for me, you get just the right combination. You get like 3-4 trades a day, typically for me on the future side, with high probability, and I like to take them. Now, one important thing to note, and this is my last thing before I hand over to Rainer, is that the statistics for Volatility Crusher tend to be higher than the ones for divergence cloud and 1-3 strike. First of all, because Volatility Crusher is quite decisive in predicting future market moves, yes, but also this has to do that our profit targets are quite near and they're actually typically a bit closer than your stop loss. So you need to have a higher efficiency, a higher success rate to be profitable. So with divergence cloud or 1-3 strike, typically our winners outpace our losers. In this case, for Volatility Crusher, our winners tend to be a bit smaller than our losers. So you do want to have a high success rate of at least 60%. All right. What else do we have? So in addition to the visuals here, you see clear entry signals. You see where your stop loss is, which in fact is a trailing stop to lock in your profits. And you have 2 profit targets. And all these levels, how far your target should be out, and how close or how much your trading stop should be trailed can be customized with the indicators, with the parameters of our indicator. So here we have an entry, as mentioned before, target 1 is there. target 2 is there, and then we have our stop loss at this point as well. And of course, we do have our statistics available for Volatility Crusher. Again, for me personally, I do not want to miss anymore because I need to see right away at a glance when I apply the indicator, do I have a chance or don't I have a chance? So if the statistics are not in my favor, I'll just go to the next chart or the next time frame. But if they are good, then I'm going to look at the parameters. Perhaps I can even optimize them further. But for all this, you need to have these statistics, which give you instant feedback of how well the indicator has been dialed in to your chart and symbol. All right. This much for the theoretical component of what Volatility Crusher is. I will now hand over the word to Rainer. Rainer, are you there?
Daniel, before you move on, I do have some questions. Okay. So Liviu wants to know, he's using the indicators, so I'm assuming the crusher and possibly the ones in the power bundle for a few months now, and they're working well. The problem I have is with the big drawdowns, even in the end, when the trade is going in the right direction.
Yeah. Okay. Actually, with Volatility Crusher, so I can see why a big drawdown will come in with 1, 2, 3 strike or divergence cloud, because you do not know where your stop loss is once you enter the trade. You will get exit suggestions along the way, but you do not really have a sense of how much drawdown there might be. This is not the case of Volatility Crusher. And you know why? The reason is, just go one slide back, it's because you know right away when you get the signal, where is my stop loss? So this is the maximum price can go down before you close out the trade. And once you know this, you can actually position size accordingly so that it matches your risk profile and it matches the maximum expectation of drawdown that you're willing to tolerate. So I think with Volatility Crusher, there's less of a drawdown issue than if 1, 2, 3 strike or divergence cloud. This doesn't mean that 1, 2, 3 strike or divergence cloud this is a flaw with them. It's just that you would need to use your own risk management when you get a signal, whereas in Volatility Crusher, the risk management is already built in because you know where your stop loss is right off the bat. Any other questions, Homa?
Okay, thanks. Yeah, one more. And before I get to that, I'm just going to ask the audience if they can to put their questions in the Q&A box, because that's actually easier to manage. So Bob wants to know, when do the signals appear? And is there a way to scan for when they appear? For example, at the end of the candle.
Yes, they will appear at the end of the candle. This is for all our indicators in the power bundle.
And is there a way to scan for when they appear?
So depending on your platform, you can scan for long entry signals or short entry signals or even exits with Volatility Crusher or any of our other signals with our divergence cloud and 1, 2, 3 strike indicators. But it depends a bit what platform you are using. So the platform, of course, needs to have a scanner built in. If it does, then you just scan for it. And let's say you're on the hourly time frame and you're scanning in the middle of the hour, maybe at 9:35 or something. What the scanner will then pick up is which symbols did have a signal at the end of the 8-hour bar. Okay, so this is what you will see in the scanner. I hope this makes sense. Any other questions, Homa?
I think we're good. Thanks.
Perfect. Alrighty. Okay, so now it's time for looking at some live charts. Reina, are you there?
Yes, I am, but you have to enable host the sharing.
Yes,
for me.
1 second. Yes. All right, all panelists, let's go ahead. Okay, please try.
Perfect. Thank you. Appreciate it. Yeah, what crazy days. I mean, the last 2 days were just absolutely amazing. And I put a chart here. And so what happened the last 2 days? You can see here, by the way, see these nice pivots and the way these channels really helped us to determine where it runs and where it doesn't run. So that's very, very helpful. And then the last 2 days, look at these 2 bars. That is crazy. We had yesterday the FOMC. The only thing that really came out bad was the German factory orders that were like minus 4.7%, which means their Germany is like the engine of the European market, and when the factory orders are down, that can really get into a recession or something like that. So that was actually the bad news. And of course, today Shopify was really getting beaten. Amazon got beaten, but otherwise there was not really any bad news really, and the market just went down. Look at this, same thing. Market went down like crazy. So you got to be careful, because it's really crazy and a very unpredictable market. And at that point, be careful and have tight stop losses and don't risk too much. Do more trades and win more, but don't put big amounts in there, because the market is just crazy. So tomorrow is another crazy day. We have the earnings and the non-farm employment change and unemployment rate. That's before the market is going to open. So that is something where a lot of people think the market is going to tank again. We'll see if the support holds. I'm not sure. I think it could definitely tank more, and then we are closing into the 4,000. So that's another big support line. But like I said, everything is possible in this market. Before I want to move on, I want to do some other things shortly, because I think what I used quite a bit in the last days, when I traded this nice swing down from the market, and then this swing up and this swing down again, that was just awesome. But I just want to show you a little bit here what the 1, 2, 3 strike and the divergence was doing. We talked about those, and here you see beautiful the way it had a double top here, pushed against the resistance, and then entering here really with very little danger, because you have your stop loss when it breaks through the resistance line, and you could actually leave it in here and ride it all the way down, get out somewhere here. And the same thing here, we have a double top and we can ride it down again. Here we had no divergence signal, but these alone, I mean, you would have made your monthly salary easily when you work this with options. And see the entry signals, just nice, very nice. So you have to always use a combination of these indicators, not just work with one alone. Use a combination, because this is really what is really the best thing. So let me show you a few examples, and I'm going to go and go for the divergence cloud here. Let me take the other ones off so you have a lot easier. Okay, and let me look at a few things here. As you know, Daniel just said it, and let me shortly repeat it. When you have the Volatility Crusher, there are a couple of things you need to know about this one. It's really a breakout or breakdown detection indicator. That's what it is, and it provides you entry signals. Sometimes it's definitely worth to wait for those signals, even though you see a breakout, could be a fake breakout, but it's actually very reliable when it comes down to the breakout. And what it does, it really analyzes the trend and the volatility compression expansion. And as soon as you have something like, look at these candles, they get smaller and smaller and smaller and smaller. And then you have a big candle. And that is really something that shows you, okay, something is going on here. We're going out of compression into an expansion. And you can see this also here with breaking the top of the standard deviation. You have the two things that you can look here. If it dips below, then it's definitely a compression. And when it shoots up and spikes up, we go into expansion. And this is where it shows that it explodes into a trend. And here I actually would like to call in Nicholas, because I'm always happy we have him here, because he's like the whiz when it comes to all these indicators. And he can go a little bit more and give you some more details in how you handle with a standard deviation, that you can really optimize these settings for your trading. Nick, can you just take over for a sec?
Yeah, sure thing. I'm going to share my screen.
Looks good.
Trading view. Okay. So here, I'm just going to talk a bit about and demonstrate how the signals work and why you get signals in Volatility Crusher, and then also how the parameters work a bit, so you get a feel for how to adjust them and what's happening when you're adjusting them. So here I've applied Volatility Crusher onto the 30-minute charts for Bitcoin Tether, and I haven't adjusted anything. It has the default settings. I haven't changed anything yet. And it actually starts off with very good statistics. So one thing, again, with all of the power bundle indicators is that statistics are very important. And when you're adjusting your parameters, they are like the final gauge to tell you how well it's doing and, you know, how good of a job you did changing the parameters and possibly if they can be improved. So here, right off the bat, I check out IET and I see that, and IET is instant efficiency technology. It's just these statistics. That's what I'm referring to. And right away, I see I've got long efficiency, 72%, short efficiency, 91%, which is surprisingly good with the default settings. And what this tells you is since March 6th, testing from March 6th to today, about 9 out of 10 of the exits that are taken from short trades are profitable. And about 7 out of 10 of the exits in long trades are profitable, which is pretty good. But you can always do better. And I'm just going to zoom in on one of these signals here, just so we can get an intuition for why we got this signal. So when Volatility Crusher signals one of its breakouts, there's actually 4 conditions for the breakout to be signaled. Now, the first one is that the candle size has a rapid expansion relative to the recent action in the look back period. And the look back period is this box. And this look back period is a parameter. And you can change it, and you'll see that the size of the areas the indicator is looking over also change. Put it back to the default. So what's happened here when we got this short signal is that Volatility Crusher looked back over the action, and it gauged the average, I guess we'll say, candle body size. And as you can see, they're very tight, small candles here. And it plotted it here down in the Volatility Crusher tunnel with this purple line here called expansion. And we see that as it gets tighter, the expansion goes down because price is contracting. The candle sizes are contracting. But then on this bar, we had a lot of expansion and the candle size increased rapidly. And we had our expansion break above the upper standard deviation band right here. And that's the first condition, that we have this rapid expansion. So that's satisfied. And the second condition is that there's also high volume relative to the look back period. Obviously, we can see here we had massive volume. So clearly we did get that condition met, but that condition can be changed in the parameters. So at this point, when I got this signal, I actually wasn't even forcing Volatility Crusher to look for volume. You can turn that on or off. And when I turn it on, we see that it still has this signal because it satisfied the condition. So basically in the volume condition, what you're telling Volatility Crusher is relative to the average volume over this many bars, so over the last 64 bars, I want my breakout bars to have at least twice that average volume. So I can increase that to 5. And we see we still have this signal because it's actually, the volume is more than 5 times greater than the average. If I increase it to something like 25, we'll see the signal goes away. And actually we have 0% in both directions because there aren't any signals anymore. There never was a breakout where the volume was 25 times greater. So I'll put that back to 2. So the volume conditions are really useful. They can help you filter, weaker signals. And they're one of the first things I like to go to when I try to increase the IET. I'll play around with them, see what happens if I'm only looking for breakouts with 3 times the volume, or let's say 5. And when I increase it to 5, we see right away over the look back period now, 100% of the long exits are profitable. So that must have been a good adjustment to make on the long side. So we have those 2 conditions, volume and price expansion. And the third condition is that the trend momentum is in the direction of the move. And the way that Volatility Crusher determines the trend is very simple. There's 2 periods that you have here, slow trend period and fast trend period. And behind the scenes, all that's happening is Volatility Crusher is looking at 2 simple moving averages. And I'll put them on right here. And these 2 simple moving averages have the same periods as the ones I've set in Volatility Crusher. And basically, you'll get long signals will only come in when the fast MA is above the slow MA. As you can see here, it was when we got this long entry, our fast was above our slow. And when we got this short entry, our fast was below the slow. And finally, fourth condition is that there's actually a technical breakout. And this doesn't mean that the indicator is looking back and finding resistance zones and support zones. All that it means is that the bar where this breakout happens is either the highest high or the lowest low of its look back period. So as we can see here, we got this signal, and this is the highest high of the look back period. And here, this is the lowest low. So I hope that helps you get a better intuition of how the parameters actually work. And what I'm going to do now is I'm going to go look at another chart. So here I'm actually on a 30-second chart for Tesla. So below the 1 minute. And I've applied Volatility Crusher here with the default settings. And right away we see, okay, decent IET, 60% long, 88% short, definitely doing better on the short side. But what I want to show here now are kind of the filtering mechanisms in the parameters, because for you, this might be too many signals. You might want to get less signals and filter out the less reliable ones, although the signals do look quite decent. So the first thing I would do is I'd hop into the parameters and I'd play around with the standard deviations multiple. So at 1.5, what this is telling the indicator is that when volatility, when candle size expands 1.5 times the standard deviation, then we can get a signal. So if we bring this down to something like 0.5, we're probably going to get a lot more signals because we're now requiring less volatility for it to qualify as a breakout. And inversely, if we increase this to 3 standard deviations, we get a lot fewer signals, which might fit your style. And also a lot of the time, it's going to increase the reliability of the signals. We see now we've got a 100% short efficiency. So at least since April 30th on the 30-second chart, 100% of all short exits were profitable. The next big filtering mechanism to determine the frequency of signals is requiring volume. So we're not even requiring volume at this point. If I click yes, we got an increase in our long efficiency to 83% now. And we lost a short signal. I'm going to bring the standard deviations back down to get a few more signals. But I'm just going to show how the volume requirement tends to increase the reliability. So if we look at keep an eye on the statistics, 72 and 67, as we increase the volume multiple, generally, you tend to get an increase in your statistics. In this case, we actually didn't on the short side, but we did on the long side. And finally, one other filtering mechanism is you might have a bias, right? You might be the type of trader that never trades short. Well, you have the option to select your trading style. So I'll say, I only want to go long. And now we won't get any short trades. And in terms of changing our parameters, we can purely focus on just optimizing the long efficiency to something better. Here I've got 83%. And since we're on a smaller time frame, I'm actually going to increase the look back period so we can take into account more action. Something like 70 and increase the smoothing period to 70. And here now we've got a long efficiency of 86%. I kind of prefer to have these larger look backs on smaller time frames. And as you can see, we've effectively made the indicator more selective and the signals are more reliable. That's the point I wanted to make, Daniel.
Yeah. And just a quick note from my side to this. As you can see, there's no secret sauce that will always work. So what Nicola told you is some things that tend to work for many symbols, but there's no guarantee. But luckily now you have IET, which will actually tell you right away if it worked or not. And if it didn't work, you try something else. And this was before IET, before our statistics. This was up for guesswork because, you may only see like 3 signals on your chart. You don't want to scroll through the whole history to see what is the performance or what are the success rates. But now it is calculated for you. So again, another use case why the statistics are so important in your decision-making process. Okay, Rainer, if you don't mind, I'm going to take over because we're nearing the end of the hour. And I'm going to share my slide and wrap up this session. So the next session will take place next Thursday, again at 6 p.m. And next week's topic, among some other smaller things, will be the Super Trend Bullseye Indicator. It's an indicator that we have developed for Motive Wave and for NinjaTrader. And this indicator, as the name says, is based on Supertrend, which is the standard indicator for most platforms. But we have added a very pertinent tweak to it, which is auto optimization. Supertrend comes with a bunch of parameters, but you never know which ones work best. this indicator auto optimizes the parameters for you to get the best results. So super exciting topic. And we're happy to show you how this works next week on Thursday at 6 p.m. Eastern. And of course, if you have any questions, please feel free to always contact us or contact Homa directly at hj@tradingindicators.com. We're happy to get any form of feedback, good or bad, or suggestions. So please feel free. The more the merrier, and your feedback is what drives us. So if there's nothing else, Homa, I will close out the session. And I wish you all a nice evening or a nice morning or wherever you are, a good night. And we'll see each other next week. Bye-bye.
Thanks, everyone.